So today we've got a lot to talk about. I didn't think I'd make a video on a Saturday, but Friday was that busy I thought, okay, we're going to do a Saturday video today because there was a lot of news stories. Obviously, the big news story that everyone's focused on is CrowdStrike, but there was plenty of other stories going on in the background as well, so we're going to cover them as well. I made that video on Friday, basically on Thursday night, talking about the stock market and the stock market with a crash situation and could there be a crash situation in 2024, and then boom, Friday was, there was so much going on. And I think as well, what was clear is that what I said on the video the other day is that when we do have that negativity, it's so amazing to see how quick that negativity spreads. You know, it's so steady when you're going upwards, but as soon as you get a little bit of fear, it's amazing how quick that fear takes hold and how quick things can move in the wrong direction, and opinions can suddenly change with a couple of red days, don't they? So anyway, enough talking because there's a lot of subjects to talk about today, guys, and make sure you hit the like button. That really helps the video get out on the YouTube algorithm at the moment, and we'll get started. Now, if you are on the Patreon, I'm just going to let you know I'm going to do a live Q&A session very soon on that, so keep your eyes open for that one. If you do want to see the exclusive content on Patreon and join the live Q&A session, then join through the link in the description of this video. If you join the Patreon, you get access to the Discord, 2 exclusive videos a week, one of them being the live Q&A session this week, and my live buy and sell alert. So I did buy 2 stocks on Friday with the craziness that was going on in the market. So obviously CrowdStrike's the first thing that I'm going to talk about. I'm going to go a bit more detail in towards the back end of the video, but CrowdStrike is what everybody was talking about on Friday, wasn't it? It was headline news on all media outlets and many companies were affected. The big surprise that I had with CrowdStrike is that the amount of people saying, who is CrowdStrike? I was like, really? CrowdStrike not that well known? Like, this is nearly 100, well, not anymore, it isn't after Friday, but it was nearly 100 billion market cap company. And I was thinking, how do people not know what CrowdStrike is? Like, surely most companies and most people are using CrowdStrike on their platforms, on the computers. They're advertising, they're pretty much everywhere. I think they've got an advertising in F1 is it the Mercedes car? I was like, how do people not know who they are? Like, it was surprising me every time that I was seeing people on like BBC like saying, so who are CrowdStrike? I don't know. It's that was the big thing that I took away there. Anyway, we'll go a little bit more detail into CrowdStrike in the back end of the video. Before we do get onto CrowdStrike, a couple of news stories that went under the radar because of the CrowdStrike news. The first thing is the UK retail sales. The UK retail sales came out. I said on yesterday's video, I believe, if it wasn't yesterday's video, it was a couple of days ago, I said my worry is the UK retail sales are going to come in absolutely awful in June. I think that the economy, the consumer is getting weaker, and weather-wise, I normally, every time a company ever mentions weather in their trading updates, I always go, yeah, whatever. But actually this time round in June, I went, June was absolutely terrible. And then July has been pretty terrible for the weather. I thought that's going to add on top people not going out and spending in retail. It is an actual genuine reason, that reason why. But overall, the weakness is there to see from the consumer. I think May was very lucky. The data that came in May was very lucky and a one-off. And we've gone back to the poor numbers that we've previously had with retail sales. And I think this is, once again, you're looking at the consumer, the spending getting weaker. The cracks are showing. I think this would have made a lot bigger news if it wasn't for the CrowdStrike numbers or the CrowdStrike situation that was going on. This was worrying. I thought, once again, we've seen another example of that economy getting a little bit weaker. And even though we've been at 2% now for 3 months, we look at, we're already midway through July, aren't we now? So maybe even 4 months now. We're 4 months in at 2% inflation, and the Bank of England is sitting there and not cutting rates, even though the economy is showing the signs of the crack. If they get to the point of view where they finally see really bad data and then they start cutting, it's the typical fashion of being very, very slow to react. And yeah, it was very worrying news that came out the other day, and like I said, it didn't get any kind of attention because of the situation that was going on with CrowdStrike. Next thing, very, very good news for DraftKings. This nearly had its own video if it wasn't for everything that happened. Very good news for DraftKings. DraftKings has had a pretty stagnant year now, really. I mean, it's only up 9%. I said that it would have a cooler year, but I was still expecting an outperformance of the S&P 500, and I'm like, okay, we need to kick on a little bit now, because the numbers that have recently been coming out with DraftKings have been absolutely amazing. And the news that came out the other day, I don't know how the stock is on a downtrend. This news was absolutely amazing for DraftKings. Penn National, who launched ESPN Bet, obviously they partnered with Disney, and it was that kind of worrying thing of like, oh, this could be a major player coming into the sector where DraftKings is, taking market share away. This was my biggest worry of holding DraftKings shares, even bigger than the rising tax rates, because market share getting more competitive shows that there's not a moat, or maybe not as much as a moat around the business. That's where my word would be at. However, Penn National have come out and they're actually going to be, a memo got leaked. They're going to be start cutting staff around ESPN Bet, which shows that ESPN Bet once again hasn't been as successful as what Penn thought it would be, what Disney thought it would be, and even what I thought it would be a decent player. And the fact that they're already kind of like winding it down, the numbers were really weak in the last earnings, and now they're actually sacking off staff, I think basically, makes them look a bit like, oh, we're going to give up on this one now. And what they're paying to Disney is absolutely crazy. I looked at Penn National, and I think ultimately the end game for Penn National now is they're going to get bought out, and who's going to be sniffing around? I mean, I won't be too surprised if DraftKings are sniffing around Penn National and other companies, FanDuel as well. So I think that's ultimately where that's going to end up. Anyway, Starbucks had a good day. The market was very poor. Starbucks, though, had a good day, back up to $79, nearly up 7% on the day yesterday. Came out that activist Elliott Management came in and built a stake. Well, it hasn't confirmed, but the rumours are that they are building a stake in Starbucks. That is, whenever Elliott Management buy a stake in a company, the shares always do quite well. It's seen as a good sign that if they're buying in, they're seeing a company that has normally could focus on a little bit more things, profitability. They're very active, they get their voice heard, and they believe that a company has maybe gone a little bit too cheap, and they believe that they can put some of their input and get the company to go up in a good direction, and they've got a good track record of it. So people were looking at Elliott coming in and saying like, okay, so if they're buying this business, they think that it's attractive levels that Starbucks is at, and they believe that with some of their input, the business can actually go back to doing really well again. And with their track record of what they've invested in, led Starbucks to have a very good day. And I'll take it. I still think Q2 earnings for Starbucks are going to be pretty weak, I'm not going to lie. So I would expect more volatility coming up on their earnings report. But I think they're probably good shareholders to have on board. So the first one that crashed is Evolution, depending where you're from. I did a video on Nike the other day, and because I didn't say Nike, I had like half the comment section in a rage about saying Nike instead of Nike. So Evolution, whatever. What we know, it's a very good company. However, the stock was down 8%. It was actually down a little bit more. I think it was actually down 10% at one point, and you can see it did have a bit of a rebound I say a rebound of 2%, I guess, but as the day went on. 18 times earnings. What surprises me now is that the company is actually trading down at 14 times forward earnings, which is like, woof, that's I think the lowest I've ever seen it traded at since I've known about the company. You also get a 3% dividend, which I always forget about, and then the dividend comes in and I go, that's a lovely dividend that's come in. So I really like the dividend aspect of it as well. 14 times earnings, nearly 3% dividend yield now, which will probably get increased with the cash they generate. And it dropped off an update, and I was really surprised because the update was actually really good. Operating revenues was up 15%, and I think on an FX neutral basis, I think it was actually like 19% up, which is 20% growth for basically a company at 14 forward times earnings. I think is it's crazy. EBITDA was up by 10%. The profit was up, not as much, but up. EPS was up as well, as you can see here. Further down, if you look at the company, they're still expanding. Obviously, there's the likes of Brazil that potentially be coming online very soon. That's going to be a major growth driver for them. I think the big thing as well that people are sleeping on is this North America. I think that's still got major amounts of growth here. As you know, in DraftKings, there's only 5 states that are currently online offering iGaming in North America. Imagine if we get a few more states coming online. You talk about New York potentially. If New York was able to come online, that's going to be a major growth driver for the next few years. And not factoring in Brazil. Brazil's a big country that could potentially be a big growth driver for the next few years. So they've got clear growth drivers for like the next 5-10 years. Cracking valuation, 14 times earnings, growing at double-digit growth, 14 times earnings, free, you're going to collect a nice 3% dividend yield as well. The balance sheet is exceptional. There's no debt on there. They've got plenty of cash. I looked at the numbers and I thought, you know what, if you're giving me an 8% drop on this company at 14 times earnings, getting a 3% dividend yield, clear growth drivers, double-digit growth, major amounts of growth still in that American market, I would have understood the drop if we were trading at like 40, 50 times earnings, going, maybe these numbers were maybe not justifying this valuation, but guys, come on. 14 times earnings for the company that's doing these numbers, I thought this was a stupid drop on Evolution. So yeah, I'll give you a little hint there. CrowdStrike. So CrowdStrike was the major story of what has been going on in the last kind of 24 hours. Obviously, I'm not going to go into full detail about it because I'm sure you've heard it on the news. You've heard many other YouTubers talk about it. I think at the end of the day, you're just wanting to hear my opinion on the stock, aren't you, really? So, obviously CrowdStrike, they had the major outage that hit businesses worldwide. My thoughts were is that it showed you how many companies use CrowdStrike. That was the really surprising thing. And I don't know if that will maybe come back and bite them a little bit on the market share point of view. Maybe there's some regulation about how much of the market share they could potentially have. I'm not sure. But the CEO did go on to CNBC, and ultimately, it seems like most of the issue is going to be resolved relatively quickly, and it wasn't actually a cybersecurity attack. I think that would be more damaging, that your major player here has been hit by a big bug, and I think people will be like, oh, do we want to use CrowdStrike if this is happening? I think that would be more damaging. The fact that it was a bad update is, it's not good, and the fact that it went out to so many people so quickly is not good, but it can be fixed, and I don't think your reputation is as damaged from that point of view. It's just that it shouldn't have ended up in this situation, and there should have been more barriers before it got so bad, and there needs to be more phased entering of these updates to, if there was ever anything wrong with an update, that this wasn't happening. And that's what will happen with CrowdStrike. They'll go on to review it and they'll make sure that this doesn't happen again, with more processes put in place. What will be the big thing is the cost. Obviously there's going to be compensation mentioned a lot in the next 3 or 4 months, and that's the bigger issue for me is what is the compensation? How much is it going to be through CrowdStrike or funded through CrowdStrike, and what costs potentially could they face from a financial point of view? I'm sure most of it is going to go through insurances. However, I don't know if there'll be some impact on the business, and that's the big thing. And with CrowdStrike, the big thing is that I think it's a good company. No one can argue, cybersecurity, massive growth in the next few years. Great growth, free cash flow growth is good. The drive up to profitability is good. The big thing that everyone is at the moment debating about is the CrowdStrike valuation. And that's ultimately the big thing with CrowdStrike is, if you're going to buy this opportunity, I think everyone will agree it's a good company. The big thing is that do you buy up on this valuation? And that's the tricky thing that everyone has to consider. And I think that obviously the big thing as well that you got to consider is when you're buying at this valuation, if there is any signs of impact financially in the next coming quarters on CrowdStrike, the share price will feel it. And that's the big risk that you have with CrowdStrike. And with me, I keep looking at the situation and I go, I always want to be careful with CrowdStrike because ideally, I think it's a very rich valuation. And I always said that I would prefer to get CrowdStrike at more like $200. Now, the big thing is it ever going to get there? I don't know. But that would be a lot better evaluation that I think everybody would be more attracted with. And it just has that little bit more risk to reward. The thing is, when you look at CrowdStrike, is that does the company really historically have that many major dips? And the answer to that is no. The only time we had a dip really in CrowdStrike is when we went through the stock market crash. And right now, when you look at CrowdStrike, you are getting this stock now on a 20, well, actually it's probably a little bit more than that. It's a 21% drop, which is quite rare for CrowdStrike. So it's a tricky one. I understand anyone that says I'm not buying this still because of valuation, because it is very rich. The numbers they have to do to justify the valuation are very, very high. And even I keep looking at the numbers, and even this weekend so far, there's been plenty of times where I go, do I buy CrowdStrike or do I wait for it lower? And if I do buy it, can they do these numbers? And I keep changing my mind around CrowdStrike and if the numbers they have to do are actually achievable or not. So also with CrowdStrike is that I would say it's tempting to look at the dip at the moment because it historically doesn't have that many dips. But at the same time, I would be caution around the valuation that if this is to overhang the business and if there is a longer term impact from it, I do think you'll get it a little bit cheaper because of the valuation, and that will start coming impacted in them. We'll see. We'll have a lot more clarity, I believe, when they do report the Q2 earnings overall with CrowdStrike. So yeah, my opinion changed quite a bit. My opinion keeps changing quite a bit on CrowdStrike. I'm on the fence, and I don't blame anyone else that's on the fence, and I don't blame anyone that's on the side of buying, and I don't blame anyone on the side that goes, it's still too much of a rich valuation on this one. So let me know in the comment section, what's your thoughts on CrowdStrike? Are you a buyer at the moment, or are you still thinking, you know what, I'm going to leave this one a little bit? Anyway, hope you enjoyed the video, guys. For the emergency Saturday update, hit that like button, and I'll see you maybe on Sunday. I've got a good backlog of video ideas at the moment, so I might even push one out on Sunday. We'll see what happens anyway. Thanks for watching, guys. See you in a bit.